From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for August 21st, 2017. I hope you had a great weekend and are ready to get started trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading, and I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. Today's news calendar is fairly quiet, so we'll be looking for the market to react off of some of the technical levels. And as always, be sure to use appropriate risk management strategies in all trade setups. Let's get started here on the USD. CHF, the US dollar versus the Swiss franc on the daily time frame. In the live trade room, we've been studying the fact that the market, for the most part, over the past couple of months, has been stuck inside of a range. I have this black box on the chart to show us that. There's been really just 2 times where it's gotten outside of here, but for the majority of the time, as you can see along the pink shaded area at the very bottom, there has been support multiple times inside the circles where the market has found support. And even in the most recent 2 or 3 days, we found support between 96.20 and 9600, and now has bounced back into the 96.50s and 70s. The blue zone holding as our current intraday resistance. You can see resistance back here as well, right in the middle of our range into that blue shaded area. Let's go ahead and zoom it in on this now a little bit. And again, we know that the pink zone has been our support and still is our support for the day today, even along this rising black trend line that we see here. The risk here, of course, is that it turns around and goes back down and breaks back underneath the pink zone, and of course the target there would be the green zone down here into the 95.50 level. Right now, current resistance is the blue shaded area. If the market goes bullish for the US dollar, we would likely see the breakout above the blue zone 96.75 and the continuation, and really the market to stay within the range that we've been in, like I mentioned there a few moments ago on the daily time frame, and target back to the yellow and the green shaded area all the way at the top. Interesting enough, the 100 period simple moving average sits at the top of the green shaded area. 97.50.65 is where our moving average sits. So again, we know where our decision zones. If we're looking for a buy scenario, really the best place to buy it would be the pink zone, but the next thing we would be looking for would be the break above the blue shaded area and targeting the yellow and the green zone. If we're looking for a short opportunity, the blue zone may be that today, but let's correlate that with other of the U.S. currency pairs and see how the U.S. dollar fares for the day today. Let's move on over to the euro dollar, the EUR-USD. Again, somewhat of a range and a period of congestion here. We have the uptrend. That's not too hard to see. Let's go ahead and zoom it in a couple of times. Take a look at this blue zone here. That's 1.1750, 1720. And look at the support that we've seen here. So selling or going short on top of that support just doesn't make logical sense right now, because for the past, well, we'll include today, 1, 2, 3, 4, 5 days at minimum, we have found support here. So we don't want to go short or sell on top of this blue zone. Even you go back here and 4 other days found support here. And if you're looking to go short, you really needed to either go back to the green zone where we know is historical resistance, or break through, finally break through this blue shaded area 117.20. So short sellers here for the euro, back in the green zone, or at least close as possible to the green zone, or under the blue zone. On the other side of that, if we don't have any motivation for the US dollar to get stronger, then we could be looking for long opportunities from the blue shaded area. Be cautious there, because it could be that the sellers, the buyers are going to get exhausted here because they've tried to send it back up and it hasn't happened yet. Sellers take back control is heading back down here towards the yellow shaded area into 116. 116.25 is the yellow zone as our next support. So interesting area right around the blue zone, but currently support. Need to either see the bounce off or the breakthrough for the next move here on the euro dollar. Moving on over to the GBP USD, we've been studying the supports here into the black trend line. The black trend line rising from the bottom of the chart long term all the way back into February and March of the beginning of this year. 100 period moving average slowly paralleling along that black trend line. That's a couple of things we've been studying in the trade room. Let's zoom it in at one time. Fibonacci from the bottom of the red trend line all the way down here at the bottom of the chart blue circle to the top of that trend puts the 618 fib right at 1.2848. Bottom of our yellow shaded area, right where the black trend line is and right where the green moving average is. So we know that there has been some historical reason for support. yellow zone, trend line, moving average, Fibonacci as support into this yellow shaded area. Just look back where the black circle is and we can see that. So what we began studying last week or late last week into this yellow shaded area was the opportunity to go long. So we did. And in fact, I'm still holding the trade from Friday where we took the long on this trade into the yellow shaded area. If you're still holding it, of course, we're still waiting to protect some profit on a bounce back up here towards the green shaded area. The risk is pretty simple. We just don't want it to break through the yellow zone. If it does, we change our attitude about the currency pair and we look for it to go lower here for the pound dollar. So right now, the yellow zone is a pretty significant support. And by the way, back here where the black circle is, 1, 2, 3, 4, 5 days before it turns around. Guess what? Today, 1, 2, 3, 4, 5 days, we've now sat at this yellow zone, just like it did back here. So I think today could be the day that we look for either the rally back towards the green zone or the breakdown of the yellow zone for the next move on the pound dollar. Moving over to the USD CAD, we have seen a couple of trends here. The red trend line, significant downtrend. Black trend line, significant rise. Well, maybe not as significant, but it was a pretty decent rise. And now we've seen the breakdown back towards the yellow or green shaded area here. 1.2555 is the green zone just above the red trend line. So a pullback now. Some interesting things about this. Let's go ahead and zoom it in a couple of times. Look at the blue circle back here. Some resistance back here on top of 1.2555. Resistance, well, I guess underneath 1.2555. That's important here at the green shaded area. Not only that, taking Fibonacci from the low of the black trend line to the high puts the 0.618 Fibonacci retracement level at 1.2553, which is, again, the top of the green shaded area. So all in all, we're seeing the red trend line, we're seeing the green zone historical resistance acting as support. We see the 618 fib here, 25.55. I would suspect that there is no reason to go short right now. I know it's been going down for the past few days, but this is a tough barrier for the market. Think of it as a brick wall in the market. The only reason to expect it's going to go lower is that it gets through that barrier, through the green zone, and then we could target back down to the orange zone, but it hasn't done that yet. So I don't think selling today is a very good idea on top of this boundary or barrier in the market until it comes either back up to the pink zone as resistance or breaks through that green zone. Until then, there may even be some intraday opportunities for a bounce and buy off of the 25.50 level for the US CAD this week. Making it on over to the USD JPY, this is a pretty important viewpoint too, vantage point if you will, since the vertical red line on the chart, which is all the way back in January of this year. So since January, if you take a wider angle view here, we've been stuck inside this blue box. Resistance at the top, support at the bottom. You can see the trends bouncing around inside of this big blue range or box that you see here on my chart since January of this year. Most important about that, if we begin to zoom it in, is that we're at the very bottom of that range or the pattern that this currency pair has been in, the purple and the orange shaded area. As we began discussing late last week, in the live trade room, this is a difficult place to go short because the past couple of times we've been in the between the purple and the orange zone, it's reversed and went back in the other direction. So going short into this support, the purple zone or even the orange shaded area, may be a little bit of a difficult proposition for us. We would need it to break down through that orange zone to give us higher confidence in that. So I think this is a pretty good area to begin looking for potential reversal from the purple or orange zone. Why? Because that's what happened the last two times we were here. So watching for potential reversal, no guarantees there, but that's something to watch for over the next couple of weeks. Back above the blue trend line, of course, would give us even more confidence in that. We don't have that yet, but definitely something to watch for over the next couple of weeks. If anything, just going short right now is a very difficult opportunity because of the historical support into this level. It'll need to break the orange zone 108.30 or so before we'll look for this to go much further for the US yen this week. Moving on over to the AUD USD, it has made a little bit of a rebound. We saw the blue trend pull back here along the green trend line last week, and then a sudden turn of events, and it got right back above the green trend line, the orange shaded area, and now we have this better bullish pressure here for the Australian dollar, moving in a little bit like this, and you can see the green trend line, we pushed above it, we're back above the orange zone, which, by the way, that orange zone historically, and I'm just going to put a circle there, has been support. So we know that as long as it's above that orange zone, the potential is support and a rally back to, at minimum, the pink shaded area, which is back into the 79.55.75 level, if not even a challenge back to the ultimate resistance high, the blue zone, at the top of the chart, as long as it's above the orange zone. If it breaks back under the orange zone, of course, we look for the reverse and the market to turn back down to the yellow zone. So very interesting will be around the orange zone. I think if you're buying the orange zone, targeting the pink and the blue zone. If you're selling, I think we need to see some further evidence of selling pressure. Right now, the pink zone would be our first opportunity, the blue zone the next, or back under the orange zone. So I don't think there's any real reason to go short here today. Maybe even just watching for an opportunity close as possible to 79 for a quick buy with minimal risk, targeting the pink or the blue zone for the Australian dollar. And lastly, moving on over to the NZD USD, it's a very, very similar situation. We have the blue trend line, rising trend, the black trend line, falling trend last week. And let's just go ahead and zoom it in on this. We saw the market push back above the orange shaded area, which is 72.90, 72.65. And it's a very similar situation. I don't think you want to go short on top of that orange zone. We've seen support there before. If you're going to go short, at minimum, you're looking at the pink shaded area here, but I just don't think that there's enough evidence for bearish pressure here. In fact, a break above the pink shaded area could be signaling our next phase of the rise here for the New Zealand dollar. Back under the orange zone might give you a little bit of hope for the downside, back towards the green zone at minimum here for the New Zealand dollar, but really an ultimate break of that green zone could even see much further lower here for the New Zealand dollar. So no short opportunity, I think, here right now. Maybe a long opportunity. This is another perspective that we looked at last week in the live trade room, and I'm just going to take this trend line and put it out over just a little bit more like this. And something else we looked at last week was this barrier right along that blue trend line and in the orange zone. Could it be a head and shoulders? Maybe, but I think our next confirmation of that would be the break of 73.50, the pink zone, for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.